Let's take the discussion on markets, especially Indian markets and emerging market as a whole, forward with a very experienced voice joining us on the show, Krishna Memani, CIO at Lafayette College now. Of course, he's been all over the place in his previous decades at Long Only Funds, Oppenheimer, many others, and a regular contributor on ET Now. Krishna, thank you very much for joining us on the show today. First of all, if I could start by understanding your thoughts on how central bank stance have been, especially the latest visit, our Prime Minister Modi's visit in US. A lot of top people actually sought his time there in his Washington visit. How do you think that India's position in global markets, or the order in the pecking order of importance of cloud, political cloud, economic cloud, is going through a transition? How do you see India's arriving on that level now?
So the outlook for India, and especially outlook for India in the U.S., probably has never been higher than it is today. And to some extent, the visit kind of underscores that particular point. The treatment that Mr. Modi got from the president and the Indian diaspora, I think, kind of tells you that everybody's quite bulled up about India, and some of it has to do with Indian growth, and I think a lot of it also has to do with the fact that China, the other fast growing country in the past, has definitely kind of the things have kind of taken a little bit of a downturn on that front.
Sure, point is taken, but the bigger question is, have these conversations moved away just from headlines into the actual dealing rooms now? Do you see more tangible conversations about investing into India as an equity market, and not just for corporates tapping into the production capabilities of India?
So I think that's a very interesting point. If you look at the data, despite all the enthusiasm about India, the actual flows, both in FDI terms and from portfolio investment terms, really haven't been that strong for a while. So I think a lot of it is really still talk. Hopefully it turns into actual investments, both again on FDI and portfolio investments, but it certainly hasn't materialized just yet. People are talking about it. Writing checks is a bit more difficult, I think.
Krishna, what do you think is the core issue for not investing in India? Is it China versus India argument, or Adani type of issues, partly marring India's corporate governance image, or any other? What is the discomfort about?
Well, so I think Adani's saga certainly didn't help, but I don't think that's really the core issue. The core issue is the same thing that has been the core issue for India for a long time, which is, if you are looking for direct investment, it's about infrastructure, it's about land acquisition, it's about labor practices, it's about education, productivity. So things like that. Things are improving for sure, and I think you can see that with large plans with respect to new investments. But I think expecting it to be very rapid, as some people seem to be hoping for, I don't think that's how things will play out. Portfolio investments, on the other hand, are a slightly different animal. The reason the things haven't really materialized on that front is because the Indian market is very expensive, especially the large cap market, where people end up participating. It's probably the most expensive market in the world.
Well, you're calling us quite expensive, but we're providing that growth opportunity as well. But nonetheless, what are you doing with your own investments as far as India is concerned? I do understand you have a Asia exposure, 30-40% of that is in India. Are you for now sitting on the sidelines or still continuing buying?
No, that's not true. So when I said the most expensive market, it's certain part of the market, which is the large cap part of the market. So there are certainly very good opportunities in mid cap and small cap, and I think to some extent in fast growing companies. And our focus really has been on that part of the market. We don't invest directly, we go through managers, but that's what we have focused on. I think the key point is this is a long-term bet. This is really talking about India being the fastest growing country in the world over a sustained period of time. So it may not manifest itself, but it is something that we are very focused on, and we are hoping that it'll work out over the next 5, 10, 15 years.
That's a headline, Krishna, which you've given us, that it's the small cap and the mid cap part of the market which is attractive, and just the large caps look expensive. So when we talk within India, you did say that you appoint managers to approach India. But in your observation, which are the sectors which look attractive to you, where you are kind of getting convinced about the areas like defense, manufacturing, Indianization, electronic manufacturing, a lot of other themes as well, which are quite becoming popular now. What makes sense to you?
So that's an interesting question. From our perspective, and I think that is the right perspective for most asset owners in the US. This is part of our growth portfolio. This is and the way we have kind of approached it is, if we are going to invest in emerging markets, it has to be on a long-term thematic basis, and therefore it has to be all about emerging market growth in certain countries being meaningfully higher than what you can harvest in developed markets. So if you kind of put it all together, what we are focused on is consumption for sure, healthcare, technology, kind of grow in a way. Some people would classify it as growthy growth, but I would classify as growth really companies and sectors that can demonstrate a good level of growth over a long period of time.
Well, call it the growthy growth or whatever. We are happy with any kind of growth that we get. But within the emerging markets itself, Krishna, what's the pecking order for yourself? Are you looking at, let's say, the other economies like Brazil, Indonesia more positively? Is China getting more limelight? Where does India stack up?
Well, I think if the Indian market wasn't as expensive, I think Indian market probably would be the first pick amongst everyone. But that is just not the case. So if you are, unless you want to make a long-term, the separate allocation into India in the growth stories, you are focused on large cap companies, and just the Indian large caps are just too expensive. So I think what people are focused on is places like Brazil, and to some extent a revival of valuations in China rather than India at the moment.
All right, Krishna, shifting away from the focus from India to global equities. Last week market was a little hawkish because bankers' commentary coming in right from Powell's commentary to Swiss Bank, Bank of England, Bank of Turkey, and whatnot. Do you think the premise of peaking out of rates is getting undone now, because certain section of the market started believing perhaps we have completely peaked out on interest rates and inflation, and now the views the market is coming to terms is that perhaps it's actually a pause, not a pivot?
Well, no, I don't think so. I think if you take the U.S., for example, the Fed paused, and I think there's a lot of tell in just that. And in his press conference, Powell had a great opportunity to swat down kind of the bullish tone that kind of emerged, and he didn't. I think he's trying to maintain a very delicate balance between making sure that inflation continues to come down and not commit to a particular path, because it's that direction of inflationary pressures is very uncertain at the moment. But in my book, I think in all likelihood, we have probably seen the last tightening. If that is wrong, it's wrong by a very modest amount, maybe a couple of tightenings as he has articulated. However, I think what is kind of more relevant is that level of high rates is probably going to be the case for a lot longer than what most people are expecting at the moment.
Okay, so we are close to the peak of the rates, and the bigger question is how long are we likely to stay there, because the cut is something which is expecting only in 24. But Krishna, just before I let you go, I wanted your word regarding this entire euphoria around the artificial intelligence stocks, Nvidia, the mega techs in the US. Call me a bit of skeptic, but we have heard and read about the dot-com bubble, the Bitcoin bubble. Is it reaching a bit of over-exuberance, or is it a tangible, investable idea around AI, Nvidia, etc.?
Well, so the AI rally is one thing, and technology rally is something totally different. And I think, despite the fact that both of them are technology, or we can classify them as technology sector, the drivers are very, very different. I think AI rally, one could classify it as a bit of speculation, although it's correcting slowly. And but as is typical in the U.S. market, some part of the market will probably demonstrate those types of speculative behavior. But I think if you look at large cap, their profitability is extraordinarily good, and they had significant correction, and the rally back in those names really is very warranted. And the valuations are getting richer, and therefore the upside is getting limited. However, expecting a significant correction without a recession, I don't think that's in the cards.
Okay, Krishna, on that note, we'll let you go. Really appreciate you joining us in the show with thoughts on the emerging markets, the US equity markets, and a lot more. But with that,